live session where we're going through everything to do with the markets, including some of our outlooks for 2026, and of course what we're seeing in front of the charts right now, including some big stuff: silver, gold, obviously oil, and the S&P 500, and even some big discussions about, of course, currencies. My name's Thomas Atkinson. As always, I'm joined by Tyrone. Tyrone, how has the summer break been? And obviously not so slow on the markets like we kind of suspect usually, is it? It was a volatile period.
It certainly was. No, welcome everybody to 2026, and I'm sure we're going to have another fun-filled year of volatility. And look, I think that the year probably bounced off to a start that nobody expected, with so much international, I guess, agendas happening, and I think that messes with the markets. And I think that, look, quite frankly, as we can see, all of the indices are effectively at all-time highs or very close to all-time highs, and that's worldwide. It's not just in the US. We've got the UK and the DAX breaking to new highs. So really, it's kind of strange that we've got so much. We've probably never been in a more uncertain place internationally, yet the markets are defying all that and pushing to all-time highs. So it's going to be very, very interesting. And not only that, I mean, I see your arrow there. Silver is just out of control. Gold hit an all-time high again today. Like, it's the poor cousin is oil, and actually that's probably the one that maybe should have benefited the most. But anyway, it's going to be, I think what we predicted last year, Tom, was obviously worked out quite well in terms of how the volatility was going to work for 2025. And I think this year is probably going to be no different. If anything, we might see another spike up in volatility, because I think international news, I guess, is ramping up another level, isn't it?
Yes, absolutely, it is. So to start off here, I guess we'll just quickly talk about the commodities. So obviously we saw silver squeezing up, and I guess what it shows is a couple of things. First up, you need to be a little bit nimble in these markets, especially if you're going on the short. So what's the trend currently? The trend is clearly up on silver, up on gold, up on platinum, palladium. And we saw some markets actually lose some liquidity over that period and become extremely volatile, including palladium, which dropped a lot and then rallied it straight back up. So when you get this kind of volatility, it does become more of a day trading market or a scalpers market, and investors just, of course, kind of want to look at the generalized macro trend. Is the trend still up? I think Ty and I will both say yes, technically it is. But of course, when you get movements in just a few days, like you can see here, 3 days, and we've moved up 16%, you've got to expect some types of pullbacks. And if you have a look here at this particular chart, you can kind of see that so far the volatility seems to have traveled a lot of the times to the 54-hour moving average, and it also has shown some signs of minuscule, I guess you would say, like exhaustion here up at these highs. So although it's not like a really strong short, because of course you don't want to go against what's been a squeeze and positive gamma, when you get moves like this that are so far outside of the normal daily ranges, I think the best general action so far that we've found a lot of people doing was waiting for the dips and then waiting for corrective presences moving forward. And it kind of comes back to that patience, react, don't predict, doesn't it, Ty? Some amazing trades on gold just over the last week in a very similar circumstances. So I'll just show you guys, amazing stuff with gold buys as well through these two ranges. Would you agree it's pullbacks and then rallies that seem to be the best at the moment, Ty, with the metals?
I think it's the only way to trade it, to be honest. I think that trying to jump on when it is at an all-time high is fraught with danger, as we know. But pullbacks with a predetermined level to aim for is trading 101. Like we've been, that's held us strong for the last, nearly 19 years of trading, Tom, as you know. And it works in every instrument, but no better than gold and silver right now, where markets that look clearly, they are very, very strong. And we probably caution you to not get tempted to try and counter trend this because you think it's going to pull back either, by the way. Like it's a very, very dangerous counter when the momentum is so strong. What you want to do is take part in the rally, but move in the direction of the rally. Don't try and preempt a pullback, because these can go for extraordinary amounts of time without pulling back and really burn you, especially something like silver, where contract sizes can be precarious at the best of times. So as much as we say it should pull back, it doesn't mean that it's going to in a time that, and when you counter trend, by the way, you have to be extraordinarily good at your entry and exits, and really be on top of it. So we don't recommend doing that at all unless you're extraordinarily skilled in getting in and out of the markets very, very nimbly, because it can turn around very, very fast. And look, yeah, gold could be at 4,800 in a heartbeat. It could be here by the next time we come and do this webinar, and no one will be surprised. So you don't want to get caught on the other side of that. So absolutely, join trends, but wait for the pullbacks, like Tom says, because it's really the best way to play it, because markets don't like uncertainty, and all-time highs, like it or not, are uncertainty. But when you get a pullback in a direction of a very strong trend, what that gives you is certainty of where a market has been. So if gold, for instance, pulls back all the way to that, say, 4,500 or 4,550 there, back to that pullback zone there, if it turns around and finds a bit of support there, it will accelerate up. And if it does accelerate up, you've got a target that's already been to. That's not uncertain, that's been there, that's fact. And markets like fact. So that's why it's such an easy way to trade, and a more reliable way to trade, because you're not relying on unprecedented moves that the market is uncertain in. And that goes for anything, not just gold and silver, by the way. Pullbacks are king in this sort of market, no question.
Yeah, and that's the beauty of the market. You don't have to make a decision until you actually see something that actually gives you some form of replication or some form of edge. So yeah, I think gold had two extremely good positions on it. It had a breakout of 4,400, which was an extremely good position in the direction of trend, kind of like an inverse head and shoulders on small time frame. And then it had another breakout after going weaker, and then kind of making a series of lower highs and lower lows, and suddenly making a higher high. That's the direction of the prevailing trend. That seems to be the better trade, I think, this year, and indeed last year with the metals. It kind of goes across the board. And I think it actually brings us into the second one I wanted to discuss today, Ty, which is oil, which of course at the moment, if you go to a large time frame, everyone's going to be looking at this and saying, well, that's a massive downward trend. And of course it has been, but with all the news that's happening, we're starting to actually see some pickup here in oil. And I think it's very important for the trader or investor out there to look at what's been occurring, at least recently, and then say, okay, well, that's changed. They are all a series of lower highs, aren't they, Ty, on the way down? And if we do suddenly make a higher high, that's kind of the first sign of some form of bid coming into this market, isn't it? It's been a while since that happened. Like
it has,
maybe
it has no doubt, and it does. I love the 60-50 level for oil. If we can get above that 60-50, it gets above all that noise. And then, yeah, a move up to 62.50, you would think would almost be a formality in terms of momentum, because there is a fair bit of resistance at 62.50 prior, because of that support that we can see there. Previously at around sort of September, October, and a tail end of September there. But you know, that is the first area I'd be aiming for, and that's $2 of comfortable movement if we get above 60.50. But in order for that to happen, of course, we're going to get a lightning bolt out of a very strong support area. The one thing about oil is, yes, it has been in a downtrend, but we know that 55 to 60 is an extraordinarily protected zone. It gets very, very difficult to break that zone. And yes, has oil been lower? Of course it has, but it's not sustainable for, you know, the world markets for oil to be down there for very long. So that's why we know it's a very strong support level. Given that oil is at the center of, you know, half of the the world events at the moment, and it hasn't really reacted the way that you probably would have thought it would, given that we're talking about record supplies coming out of Venezuela and everything else. But there's still a lot of talk and not a lot of action in that regard. But oil, for one, if there is blockades and oil starts to get restricted, what's going to happen? Of course, demand is going to increase, the supply is going to drop, the oil price is going to go through the roof. So yeah, the fact that it's already at support, to me, it looks like a very viable trade that I'd be looking for, because the chances of there being trouble over the next 2 to 4 weeks is probably more than things calming down. And trouble means a supply issue for oil, and a supply issue for oil means the demand will obviously increase, supply will drop, oil price has to go up. That's just how it is. So it's at a good level. I like it, and I think it's just got a little bit more work to do. Give it another 75 cents, Tom, and could be happy days for a nice little move on oil.
Yeah, and it's been a long time since any oil bull has been able to say very good. But actually, oil stocks and oil services actually have been doing well for probably about 3-4 months. It just shows you different markets within markets. I did also just mark here that CPI is coming for less than 24 hours, which obviously is the inflation figures coming out of the US. And funnily enough, if you actually go over, I've seen some charts here, and if you look at the charts, you often get this kind of chart, which is effectively the market going into inflation, coming back out of inflation, so deflation, and then stagnating. And this is kind of where we are, and this is actually the 1970s. So you can actually see we're right on that point, the precipice of this year, of whether we see a reinflation and or some kind of just like deflation continuing. And all of that happens this year in terms of at least the synergy from last time. Oil often is a precursor of that. So interesting chart here to start off with. Another one before we get into the stock market and crypto is the dollar index tie. Now, the dollar has found some bulls again recently. Some people are claiming it's the petrodollar or any of these other types of trades, but really doesn't really matter. The main thing is you're looking at the price action rather than opinions, and the market quickly moved to that next level of supply. I don't think it's done enough to say, oh, yes, we're back and the dollar's back. But I would say that the chart to watch this year, since we're looking ahead a little bit, is going to be the dollar index trend line. So if we actually have a look here and we've got this massive trend line coming through the back, this is, I think, very significant because it started back in 2011. It held the bearishness of the dollar back in 2021. And then since dollar superiority of 21 into 22, it's so far held it up. But I think if we drop this trend line tie, that could be a massive changing of the guard for the US dollar being kind of the leader of strength in fiat currencies. Your opinion on the length of this, the strength of this level? So important.
Yeah, I think, look, the level is very strong, but I think from a perspective of whether it's going to be the leading base moving forward, I think that's where the problems might lie for it. Because I think that, yes, I agree, it's super strong here, and it has been for a while. Look, it's tested the levels at around that 96, 97. It's been very, very strong, although it hasn't done anything. It is trying to move up higher now, but it has been very, very strong here. There's no question about that. In my mind, it has to get above that 100.50 level to be truly out of this little rut, if you like. But it's really going to come down to, I think dollar is going to be one very, very interesting one to watch for 26, actually, because it's the one where, yeah, we could see like you say, a changing of the guard, especially if, yeah, some of the let's call them threats that are coming out of the US administration happen. And there's a lot of talk around the breakdown of NATO, and really what they're really referring to is that they're saying that even if there was warfare over Greenland, it's actually not going to happen with actual war. It can happen with currency, and really the dropping of the dollar as the base currency could hurt the US more than any bullet can. So, and I think that's why we've got to be careful, because the dollar is in high focus in that regard, because if they do that and they force the treasuries to basically all of the bonds to go, it's going to be a changing of the guard, and that's what we have to be aware of in 26. I think that there could be major changes. But right now, we can only trade what we see, like we always say. And to me, it's trying very, very hard to get above that level. The 100.50 for me is the line in the sand. If it gets above there on a daily, I think that we could see a really solid move back up to around that 104. I know that sounds like a big move, and probably 101.80 would be the first target I'd be aiming for. But it's found support where it needed to find support, and it's been here for a long time. It's not like it's, it spent the best part of, nearly a year underneath this level. So this area that we're talking about here on the weekly chart, they're weekly candles, right? So it's spent a very, very long time in this this area, which really adds to what Tom's saying in the first place. But this level of support on this trend line is extraordinarily important, and it's done everything it's needed to do so far. It's held up, but before we can actually start trading it actively and look for a move longer, I think it has to break above that 100.50. I think it just needs to get out of this area and clear it once and for all. And if it does that, yeah, I think there's some good opportunities up, which is of course going to short the euro. But in my mind, it's done its job right now, but it hasn't quite given me enough confidence yet to say maybe it's time for the dollar to start moving up. Got a little bit more work to do yet.
Yeah, and so again, another one trapped a little bit by current pressure, but I would say neutral in many ways. As we kind of look at charts compared to gold or silver, it's definitely neutral. Let's jump on over now to the US 500. As Tyrone mentioned, every single one of these market indices seems to be just going up, 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 and up. You can see here, US 500 is dull, but bullish, and it managed to actually kind of rally off the last 24 hours of news, where of course we saw Jerome Powell and Trump getting into it a little bit, which is definitely a story of 2026 as well. Price action is still quite bullish, guys. And it doesn't really matter which price action you're looking at. They're all quite bullish. Semiconductors, often considered the new Dow theory. That's obviously rallying at this point in terms of we continue to see semi-strength. That is not usually a bearish sign for markets. And if you have a look at pretty much all the broadening bases on markets, you look here at the DAX. The DAX broke to the upside just early in January and already was positioning for that basically at the end of last year. And then, of course, we get news of more defense spend, and there's a lot of defense companies in German 40. So we're seeing those move up. The Korean markets moving up, the Nikkei is moving up. And another one that's coming through has been China, which has been sitting for a while, and that's having a powerful day at the time of this recording. So you could see here, it's been sitting now for almost 6 months. And then all of a sudden we get this rally and a couple of major stocks also breaking to the upside. And you'll note here that we have this really strong thrust coming through. So we get through something like 27,200. We close above there on the weekly high. It's looking like this pit, this pullback in time, this accumulation potentially is what it is. It's certainly looking good into Chinese New Year, isn't it? When you look at the Hang Seng and the Chinese markets. It's
probably my favorite world industry, to be honest. I think it's got the one that's got the most potential. I think it's been, slowly hiding in the background while everybody else is making all-time highs, and it's been pulling back, but it's been very steady over the last few months. But now that particular move looks very, very strong. And I tell you what, I agree. If we break that 27,200, we might see a significant move up on this one, because I think that it's been building up in its momentum. There's no question about that. The coiling has happened over a long period of time, but it's been very, very steady when other markets have just gone, they've gone up, sure, but yeah, they've kind of ground their way up on basically based on not a lot. I think I'm not seeing a lot of reasons why all of the other world indices are at their all-time highs and pushing higher, but I think this one's a sleeping giant. And I think if I had to pick an indice to really get on board if it breaks to a new high, I reckon this one might be the one.
Yeah, and we can also take some distances as well, and you can see decent proofing to the previous 29,270 kind of highs from the breakout. So again, if a market pulls back for a while,
like we said earlier, exactly like I said earlier, the market loves certainty, and this is one of the only world indices that's got certainty if it breaks this level, because it's been there before, and that can't be said about the UK, the DAX, all of the US markets. That's why I think this has got the most amount of potential, 100%.
Yeah, so definitely some improvement there again in the Hang Seng. So some nice stuff there in the indices. Again, world markets, emerging markets. If we just have a look here at EEM or something like that for emerging markets, you can see again all-time highs. So markets coming off some consolidation basis and moving forward. Maybe the most contentious subject of the last year was probably Bitcoin, and that is that we see here, basically a very, very strong kind of consolidation, but no real action. Now, we do have kind of a lot of traders with stop losses underneath 86,000. We have a lot of traders with, squeeze potential at 94,500, and we are currently in the middle of both of those. That's kind of showing you that, again, it's a little bit neutral coming into this year. There are some big points coming up. News, often if it's in the press, it's in the price, we say, but often news can create catalysts, and those catalysts can push market momentum. So I think either a break of 94.5 or 86 is going to most likely this time give us that more certainty around the next big move. And to the upside, which is probably one I favor at the moment. We'll see what Ty thinks in a moment, but I'm thinking like maybe 104 to 106 is the next technical level. So quite a lot of upside should it come through. Which side do you focus on here, Ty, with Bitcoin and the action that's moving forward?
Yeah, I think it's doing all the right things for a move up. I think my preferred bias would be a move up, because I think that's got more potential in a comfort level. I think not many people want to see Bitcoin go down, Tom. I think a lot of people are very bullish on Bitcoin. So when momentum kicks in and people start to jump on board, I agree with you. I think the 104 to 106 to the 107 level is a great level as a target. And when you look at it from where we're at right now, there's a lot of upside there. And when you look to the left-hand side of the screen, we always talk about this, the clear air in between the break of this circle that we can see right here and where the next support was, which should prove to be resistance now, is very blank. So it really, we call that blue sky in a way, because there's not a lot of recent resistance in front of it to actually really stop it from getting up to that level if it gets a bit of momentum. So and that's the trade I would prefer, because I think if we break to that zone, there's just not a lot of obstacles in our way to get to a decent profit out of the level that we're at right now. But I think given, and this is one of the things that you want to be mindful of as well when trading, not just Bitcoin, but anything, when you see a good potential for a move up, it pays to be even more patient and let the market actually tell you what it's doing rather than trying to get in early. Like, what I mean by that is you can see here that Tom's got a line there at 94,500. That is the line for me that needs to be broken. And you might say, but we can get in at 91. We're leaving 3,000 on the table. But realistically, if we get a break above that zone, that's a serious momentum shift. That's effectively an ascending triangle playing out. You could draw an ascending triangle there quite easily. And a break of that 94,500 is a break up above that ascending triangle. So as much as you might say we're leaving a couple of thousand on the table because we think it's going long anyway, a break of that level gives you a lot more, it gives the market, more importantly, a lot more certainty about where this is going. And because there's so much upside from that level, it pays to be just a little bit more patient and wait for the momentum to actually back you up rather than speculating that the momentum is actually going to get it there.
Yes, it's all about that confirmation and making sure we look for those things. I noticed also if you're looking at crypto, Solana as well has had some improvement here over the last couple of sessions, but more importantly, it has that really strong level of about 146, which I think is also, correlation is the key often with pairs, and we're looking for, what's going on with XRP, Ethereum. Ethereum, I think, had the largest amount of transactions ever on it just recently in terms of daily averages, and then we've got Solana as well, potentially here. So if we do get breakouts, we kind of expect multiple crypto markets to break at the same time or very similarly, and that I think would be a positive sign. You want that confirmation on confirmation on confirmation. So far, guys, we've covered kind of the metals, which do still look quite long, although they are extended at the time of this recording. So what that means is that the risk may be actually a little bit towards the downside and then possibly more towards the upside after that. Then we've also got, of course, some movements here in oil, which is starting to look a bit more promising. We've got dollar, which is more neutral. And of course, we've got Bitcoin, which is neutral for now, but could have some signs on it in the future. And of course, China, as Ty said, the index that looks probably the index that looks like one of the best, but also has that price, not price discovery, it's actually got price history, which is still in front of it, which is price action through. Some other interesting pairs, Ty, that I think that people haven't really paid that much attention to recently have been the Aussie as well, so the odd US dollar in terms of currencies here for everyone. This is actually broken to the upside late last year in December, and since then it's just been slowly going up. And I don't really see much resistance until into the 69. So if we have a look here at the levels, you can kind of see a series of 20 moving averages on the daily, series still of higher highs, so that's a good sign, isn't it? And yeah, nice breakout here, I think, of 66. So for me, it's more the bulls seem more in control than the bears on this chart. What are your thoughts?
They do, I agree. And I think it's been coiling for a long time too, so it was due for this breakout. And I think that when something coils and considers a level for a very long time, then eventually breaks out, they're often the moves that continue on. I think that a 69.80 to probably the 69.80 to even sort of low 70s is a real potential achievement for the Aussie USD in a short amount of time. I think that it's building really nicely from a technical standpoint. The higher lows off the 20 moving average on a daily. Look, anyone who's been following us for the many years that we've been doing it know how much we love those pullbacks to a 20 moving average. And this is doing all the right things at the right time, really. So I like it a lot. And this is certainly not one I'd be looking to short. I think it's really one of those ones where you've got a bias for the long, mainly because the information is there. It's not because we want the Aussie to be long. It's because there's enough information there to show us that it's doing all the right things for momentum to be up. So, yeah, I love that the higher highs and higher lows are respecting the levels that they should. It's pulled back to the right level as well, that sort of 66.50 pullback, and then launch off the 20 moving average is a really sexy thing in technical analysis, as we know. And yeah, that's sort of that 69 to 69.80, I think, is a real potential target for it.
Yeah, I agree. There's some interesting targets there, and just shows that currencies are really starting to activate as well. Late last year, we've obviously got that dollar index, which is going to be a great watch for currency traders to potentially get longer term trends. And yeah, just been there's a lot of abundance out there. Always look. got a question coming in for John. Reason I brought up Aussie was because one of the reasons this trade is going up is Australia may have sticky inflation, which is causing the potential chance of interest rate hikes, not cuts. And then on the other side, you've got US dollar, and obviously you've got this idea that there's going to be more cuts because Trump kind of wants them. And that's in the news, of course, at the moment. Now, there's 2 rate cuts expected for 2026, but let's have a look at the yields. So the US 02Y and of course the 10Y, and these two, one of them set more by the market and one of them set more by the Fed. And you can kind of see here recently the trend has been more towards the upside on yield. So that is less cuts, or the expectation that maybe the economy actually might heat up a little, or inflation might take out of control and require interest rate hikes. Now, as John said, compared to prior periods, the net moves in bond yields over the past month have been relatively flat. What moves are traders waiting for a breakout? Well, I think the 10-year is usually the gold standard in yields, John. So when you're looking at this, you're obviously saying, okay, well, is this a base formation? Certainly looks pretty good technically. Got a lot of spring consolidation here on the right-hand side, or demand zone or accumulation area. And of course, if you breach this 4.2%, then you're starting to look a lot more positive in terms of a breakout there in yields that could push into 4.3. So I think it's a mixture of just, yes, the longer yields have moved up, but there's just no breakout yet. And that's confusion. It's got to be confusion about what's happening with the Fed. Will we get a Fed that's going to go super dovish, or what are we seeing here? So I would say in this case, there's no price action there, so probably not worried about it too much. But Ty, what are your thoughts? Any particular catalyst you're seeing on yields?
Now, only that I think it's starting to, it has been going down for quite some time, obviously you can see by the chart, but it's looking like a bit of a rounding bottom now. It's starting to level out around this level here. There's not a lot of action just now, but yeah, I think the downward movement has been suppressed to an extent. I think we've seen enough sideways movement now to probably justify a bit of a move up, and a break of that, 3.6, I think, percent could be significant, but I wouldn't be preempting that now. I think right now we're still just seeing a whole lot of nothing, and I think you just probably let it play out, but certainly keep it on the watch list. Something you want to keep an eye on, but it's going to get a lot more interesting at 3.6%.
This is actually a great kind of segue to talk about the alert system. So obviously in TradingView and Pepperstone attached to it, you can set alerts on your chart. This is the type of chart where I'd look at it and I'd say, okay, I see here the 2-year, I see the 10-year. I'm interested in knowing more. Should they actually activate? And then of course maybe we can come and revisit that discussion. But if it doesn't happen, hey, I don't want to check it every day. You just set alerts, and if you get it, you get it, and if you don't, you don't. And it kind of reminds me of just like last 24 hours, I set an alert on Staples a while ago, and then all of a sudden, boom, there it goes. So you can see here, strength came into Staples about 3 days ago, boom, 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 off a set of announcements in the US, and all of a sudden it's breaking to the upside. So obviously still pressure on the supply, but now it's worthwhile having a conversation about it. And I do that all the time. So does Ty. Tesla, 430, level that we were watching. After we hit almost 500, pull back to 430, good little level of demand. The alert went off, you come back to the charts. So I think it's a great question. 2026, guys, what are our feelings? I think it's a year of volatility. I think it's a year of abundance. That is, there's a lot of different opportunities out there. A year of course, a lot of news. So you're going to have to be able to cut that out. And as Ty and I often mention, price action is the true indicator, because it's not really biased in terms of it doesn't take into account all these bits of information that we're considering. It takes into everything. And I always tend to find the price action is usually better than my opinion. And that's because it takes into consideration everything, and maybe information we don't even have. So for this year, I'd say clean the mind, clean the slate, watch the price action, and of course, pay attention to setting alerts and focusing on that stuff. Ty, do you have any words of wisdom for everyone for 2026 as we go ahead?
Only that I think we treat it very similar to 25, trade the same way. I know a lot of our avid followers did really, really well. They had an amazing year in 25, and I think 26 is not going to be much different. It's not one that it's a set and forget sort of market, that's for sure. The environment changes on the daily and the weekly. So I think that every fortnight when we bring these to you, you're going to see significant changes in the market moving forward. I think we're still only just ramping up. We're only in the middle of January now, but I think we're going to start to see some pretty good action moving into February, March, and April. So yeah, just keep the trades relatively tight, I think is the best way to play it. Scalp and day trade is the way to go for now until we get some key levels that we can actually trade with confidence for the longer term. But just be safe, I think is the best way we can talk about it.
Yeah, awesome. All right, thank you so much, guys. We'll see you in the next one in 2 weeks' time, and it's great to have you all here. Bye for now.
Thanks, everyone.